Okay, what the heck just happened to FICO, the predictive analytics and data science company, best known as the keeper of the FICO credit score, a company that we've liked for a very long time. We love their business model. Historically, this has been one of the best performing stocks in the past 20 years. But lately, it's come under attack by the new director of the Federal Housing Finance Agency, who's called FICO a monopoly. Just a couple of weeks ago, the FHFA pushed through new rules so that lenders can use different credit score models to issue mortgages that are later sold to Fannie Mae and Freddie Mac. Now, look, I was hoping FICO could turn things around this earnings season, but last night they reported, and while the quarter results were terrific, most of the conference call, unfortunately, had to be devoted to the FHFA drama. Initially, the stock roared in after-hour trading. I thought that was right, but then it rolled over and then finished down 6% today. That seemed wrong to me. Is this a buying opportunity, or do we need to be worried? Maybe I'm missing something. Let's check in with Will Lansing. He's the CEO of FICO. Get a better read of the quarter and what comes next. Mr. Lansing, welcome back to Mad Money.
Thanks so much.
All right, so, well, this was a pretty impressive quarter, frankly. 20% growth, 37%, with most of the growth coming from B2B portion of your scores business, which I love. Tell us what happened in real life to this quarter, because it was a darn good one, especially given the fact that the housing market's not so hot.
You know, it's been a good quarter, and it's been a good year, and it's been a good few years. Our scores business has been performing double-digit revenue and profit growth for many years now, and this quarter is no different. And so, you know, we're proud of it. And it is odd that our stock reacted the way it did today, but I don't think it had anything to do with the quarter. It obviously had more to do with people concerned about our, you know, the strength of our franchise going forward. So whenever you want to talk about that, I'd be happy to talk about it.
First, I just want to get an update on the housing market, where your things are, and the guidance, because some considered that what you did was you gave a guide down for the current quarter, final quarter of your fiscal year. I want to clear that up, whether that's the case or not.
No, our guide is our guide. I mean, I think, first of all, we're a lagging indicator. And so, you know, I don't think you look to FICO results to see what the future holds. Right. The bureaus are probably 6 weeks ahead of us. But our guide, we have 1 quarter left in our fiscal. And so our guide is pretty reasonable guess as to where we'll be.
Okay. Now, what I think kept things down is there's a very bizarre tug of war between you and a fellow by the name of Bill Pulte, the FHFA director, and that's been talked about on our air. But I'm going to clear the air of the air. Why isn't the FHFA, when they're trying to analyze products, first analyzing FICO 10T, your new product that is obviously the gold standard, and it's what anyone would use with common sense?
That's absolutely right. FICO 10T is the best score in the industry today. It's the most predictive. It identifies and prevents the most credit defaults. It actually qualifies more borrowers. So FICO 10T, hands down. And this was done, you know, by the FHFA and the GSEs. They did a long multi-year evaluation of our score, the Vantage score, other scores, and concluded that, you know, ours is the most predictive score. So absolutely, when it comes to moving on from the current score, which is what we call FICO Classic, FICO 10T is the obvious next step. But that's not exactly what's going on right now.
Right. Now, the government is, or Mr. Pulte is using a model that you have that's good, not the new model, matching it against the new model of someone else, which I just think there are very few people would ever do apples to oranges in real life. I'm trying to get a handle on how it's possible that someone in the government doesn't recognize when there is an apples to oranges comparison, which we would never allow in so-called real life.
Yeah, that's absolutely right. So just the background is FICO Classic, what we call FICO Classic, has been used for the last 20 years. It's a very good score. It's highly optimized. All of the industry has models built on it. The regulators do their capital adequacy assessments based on it. The mortgage-backed securities market prices based on it. So very good score. But when the FHFA undertook to think about revising and moving to a new generation of scores, this was some years back, they looked at FICO 10T and they looked at Vantage 4. FICO 10T outperforms FICO Classic by quite a bit. As I said, 18% fewer credit defaults than FICO Classic. But Vantage only barely outperforms FICO Classic. So you're right, it is absolutely apples to oranges if you look at Vantage versus Classic. And if you look at Vantage versus FICO 10T, our latest and greatest score, we win hands down. Oh. We have a white paper to that effect, and the FHFA has the data.
Yeah, I mean, it's clear. I would think everyone wants, it's in everyone's interest in the system, particularly Fannie Mae and Freddie Mac, to have the fewest defaults. We know that when they suspended the reality of rigor of what you offered, we had the housing crisis. So why would anyone choose a system that may actually produce more defaults than one that would be able to shine a light on fewer defaults? I'm trying to get no, because look, I'm obviously flustered. I don't understand it. There's one system that produces a false positive and one system that produces very few of them. And I'm trying to understand why yours, which is the latter, isn't the preferred by the government. It's clearly preferred by the industry.
It is clearly preferred by the industry. If you look at, well, first of all, FICO score is used all over industry, and we've been competing with Vantage for 15 years, and we always win. We have over 90% market share in all these other markets that have nothing to do with the government. And then within the mortgage market, in the non-conforming market, where there's no government mandate, FICO is the clear industry standard. And guess what? They're adopting FICO 10T. So we've done $313 billion in originations with FICO 10T in the non-conforming mortgage market. And then on the conforming side, we're all still using FICO Classic. And the director has said, okay, we'll now accept Vantage. And FICO 10T is technically approved by the FHFA, and obviously it has to be because it's the best score, and the data and the analysis proved it. But there seem not to be plans for implementing it on the same timeline as Vantage.
Okay.
And so that is an apples and oranges issue. And you're absolutely right. There's all kinds of safety and soundness concerns with doing what they're doing.
No, I mean, one thing, I know that they've called you a monopolist. I mean, to me, a monopolist means that you raise prices, you're able to screw everybody, and everybody gets hurt. How much of a closing cost is FICO?
Oh, I'm glad you raised that. So we have been accused of raising our prices, and it's true, we have, but they're still very, very small relative to what we offer. We charge $4.95 for a mortgage score out of $6,000 in closing costs. So it's not the cost of a FICO score that's creating problems for home ownership. But you know, that's kind of where we are. Okay,
so just to go full circle, if someone sold the stock today because they're so afraid that you'll never be, that FICO, the real good FICO, the new FICO 10T won't be used versus Vantage, what do we say to them? Don't you think that Vantage score in the end is going to be compared apples to apples, that the government can't frustrate you forever?
Well, no, that's absolutely right. First, I think that we're going to stay with FICO Classic for quite some time because all of the industry is built on it, and you can't just turn that off. I mean, FICO Classic has been through the downturn in 2008. All the models have been stress tested, with FICO data through that entire period. They've been tuned and optimized. And so it's a very good score, and it works really well. And even departing from it in any way, shape, or form is questionable. But if you were going to change, you would obviously want to adopt the latest and greatest best score, and that's 10T.
Okay, and then the other thing is that there might be people who say, you know what, mortgage rates are so high, you can't own FICO. How much of a correlation has there really been between mortgage rates and the actual numbers of FICO?
Well, we've performed really well as rates have gone up, and as rates go down, we perform well kind of in all environments. That said, our volumes are likely to go up dramatically as rates come down. So I would say, whatever you see today is going to look a lot brighter as rates come down. We'll do a lot more volume. We're probably 40% off the peak in terms of volume.
Well, all right, look, I think we covered a lot of ground. Obviously, I was flustered myself. I admit that because I can't really believe that our government could be as unfair as, given the fact that we have a system that every time we've deviated from has caused tremendous havoc in this country. And we can't have that happen. I want to thank Will Lansing, President and CEO of FICO, who understands this better than anyone and does not want to have a repeat of the housing crisis.
Thanks, Jim. Great to be with you.
Absolutely. Mad Money's back there.
Coming up, could this mining name be a hidden gem? Cramer's talking to the top brass of Agnico Eagle after earnings to dig into the numbers. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.